In this video, I'm going to teach you how to spot absorption using order flow. Absorption is one of the strongest reversal or continuation trading models that you can use with both the ICT levels and also the volume profile levels. So I'm going to teach you both ways. So for ICT, we're going to use the 5-minute or 15-minute fair value gap. We're going to use the 5 or 15-minute buy side or sell side liquidity. And then we have the session high and low. So this could be the Asia high, Asia low, London high, London low, right? For volume profile, we're going to use the overnight value area high and overnight value area low. So the overnight volume profile starts from 18 till 9:29 or 9:30. Okay, I keep it at 9:30. That's perfect. So this is the overnight volume profile, right? And we want to look for absorption at the value area high and value area low. Of course, context matters. I'm going to teach everything in the video, from how to spot absorption to how to take an entry after you see absorption, right? And because the thing is, you can see absorption at a key level, but you don't know how to enter a trade, and you can get faked out a lot of times. I'm going to show you all of that. So make sure you watch till the end. And then, of course, we have the previous day cash session, value area high and value area low. So the previous day cash session is from 9:30 till 16 New York time. Okay, so we want to plot our volume profile on the previous day from 9:30 till 16. And the value area high and value area low of the previous day from this timing is very strong as well. Okay, and then we have the previous week value area high and value area low. So you want to mark out the volume profile across the entire previous week, and those are like the strongest level. Okay, and then later on, I'm going to also give you an extra confluence that you can use. So gamma levels that are overlapping with our key levels. So if there is a gamma level that is overlapping or within the 5-minute or 15-minute fair value gap, that gives you high conviction. And similarly, if there is a gamma level resting above the value area high or below the value area low of these profiles, then that gives us very strong conviction that the setup is going to play out. Now, the thing with absorption is you're going to see absorption happening everywhere on the chart, right? So the context really matters. We really need to see absorption at our key levels. Other than that, it's just noise. So you want to just avoid looking for absorption at random locations. These are the key levels that I primarily use, and I'll keep on using them. All right. So let's just go here. And I'm also going to pull out the order flow platform over here, which is Deep Charts. And that's the order flow tool that I use. If you want to grab it, there's a link down in the description. It's 25% off if you use that link. And honestly, I couldn't recommend this enough because I use it personally, right? So let's start with the ICT key levels, right? So let's say we have a 5-minute or a 15-minute bearish fair value gap resting around here. Now, when price approaches this level, right, we want to open up our order flow tool. So first I'm going to show you over here, and then I'm going to move on and show you actual examples later on in the video. But first we need to understand what is absorption, right? So first of all, since we are looking for a sell position from a bearish fair value gap, and of course, when using ICT concepts, you need some context as to what your bias is and where the draw on liquidity is, right? You cannot just simply use it on every single 5 or 15-minute fair value gap. For example, if we tap into a 4-hour fair value gap and then we displace lower, and then we create this 15-minute fair value gap, that is a good setup in my eyes, right? So let's say that we approach this 15-minute bearish fair value gap. I want to see price. So now we want to drop down to 1-minute time frame. We're going to look for our entries on the 1-minute or 2-minute time frame. So around this fair value gap, what I want to see, guys, is a lot of aggressive buyers stepping in, right? Using the deep trades or big trades indicator. You can use big trades indicator on other order flow tools as well, right? So on deep charts, it's deep trades, and you want to see aggressive buyers stepping in. But notice what's happening. Price is not going up. It is stuck between this fair value gap. We are not able to break outside the bearish fair value gap. We are not able to inverse it. And there's a lot of aggression from buyers, but there's no reward. So think of it like high effort, no reward, right? When you're seeing a lot of buyers stepping in at one location, but there's no movement to the upside, that is step 1 of absorption. Step 2, if I want to take a short position from here, and let's say there were more buyers around this area, right? I want to see aggressive sellers stepping in, and then I want to also see those aggressive sellers close below the aggressive buyers in the close proximity. So we have absorbed buyers here. And if you look to the left side here, we had some big orders here as well. So first, we need to see aggressive sellers stepping in. So for example, that's from where the aggressive sellers step in, right? A lot of people make this mistake and they take a short position right away. Well, we have a support level here, the buyers, right? So we want to see that level invalidated. That's where the aggressive buying started, right? So we want to see price close below this. Now, once we close below this level, right, it's simply just taking a short position here. And then you can put your stop right above the aggression of the sellers, right? That's from where the aggressive sellers stepped in after absorbed buyers. A lot of aggressive buyers at this level, but no follow through. And then we also inverse below the aggressive buy orders in the close proximity. That gives me very high conviction that we are going to go down. As for your targets using ICT concepts, you can pretty much use equal lows, equal highs as your target, or you can use the session high and low, or you can use the previous day high or low, right? This is basically what absorption setup looks like. That is what I trade, right? Now, let's say that there is a gamma level. Now, I use Mentor Q, and you can use any other tool out there, but options flow is what actually moves the market, and it is just so good if you pair it up with ICT or order flow. It doesn't matter, right? Let's assume that we were in a positive gamma regime. So when we are in a positive gamma regime, guys, the fair value gaps tend to be respected more. Why? Because the dealers are going to hedge against the price. So if price is going up and it taps into a key level, they will be forced to hedge to the downside, right? So in a positive gamma environment, you can expect the fair value gaps to be respected, right? In a negative gamma regime, right, you can wait for price to inverse above the gap, right? So because in the negative gamma regime, the dealers are going to be forced to hedge with the price. So if the price is going up, right, they're gonna be forced to buy with it. So for example, this is a short setup in a positive gamma regime, right? And let's assume that we also had like a call resistance 0 DTE. All the levels you can integrate with TradingView, and it's going to show you all the levels on TradingView as well. There's a link down in the description if you want to grab Mentor Q. There's 30% off if you use that link. The reason why I got affiliated with these programs, so you guys can get it for a cheaper price, because I was not affiliated with them before, right? And I was like, maybe if I get affiliated with them, a lot of people would be able to get it for a low price. And of course, I'm going to make some commission as well. I'm not going to hide anything. That's bullshit, right? So that's positive gamma regime, right? We have call resistance 0 DTE, right? Price taps into this level, and then we pretty much look for our absorption setup, which is like closing below here, and then we take a shot. Now, let's say that we are in a negative gamma regime, and in negative gamma regime, right, if the volatility factor is high, right, and let's assume that we have, let's just remove this for a second. Let's say that you can also use it for like IFVGs, right? So let's assume that we took out some major 15-minute liquidity. So this is a 15-minute fair value gap up here. 15-minute liquidity here, right? And then we drop down to 1 minute time frame. Now we can simply use our IFVG model. So we have a bullish fair value gap here, right? So let's just do that. We have a bullish fair value gap. Now, what I want to see for inversion, right? Since we are in a negative gamma regime, I can expect this fair value gap to be broken to the downside again, right? So you can see if we were in a positive gamma regime, we would expect this fair value gap to hold, right? Because that's from where we're gonna like probably push up towards the next level. But when price inverses below this gap in a negative gamma regime, and also the candle that inverses it has aggressive sellers within the body of the candle, that is a very strong setup that you can take. And also, if you pair it up with gamma levels, so for example, if we have a gamma level here, let's say GEX1 level here, right? We sweep 15-minute liquidity. We also tap into the gamma level, right? And then we get inversion to the downside, right? And make sure in this leg from this low to this high, all the fair value gaps are inverse. So if there are two fair value gaps, you want to wait for both of them to get inverse. Just the basic IFVG strategy that I've taught on the channel before. So aggressive sellers in the candle that inversed it, coming from a gamma level, right? And the way that you spot absorption from here is, again, same thing, guys. A lot of aggressive buyers at the sweep of the high, right? And also at the gamma level. So a lot of buyers here, but not able to break above this level. And then we see aggression coming in from sellers, inversing below the bullish fair value gap, invalidating the bullish order flow. And then we pretty much take a short position. And that's pretty much how you take setups using ICT. Of course, I'm going to give you guys some examples. But now let's move on to the volume profile, right? And then I'm going to give you guys some examples as well. So now we have covered, same methodology applies with all of these, right? So if you are in a fair value gap, if you sweep liquidity, and then if you, of course, combine gamma levels, right, with these, you have a system that is just so strong. And now let's talk about the volume profile. It's basically the same. So if we are, let's say that we have the volume profile, right? And then we have this volume profile shape, right? And let's assume that we are in a positive gamma regime. So when we are in a positive gamma regime, guys, right, we can expect failed auction setups to play out. But that's not the point of this video, right? I want to show you how to look for absorption at the value area high and value. Let's assume this is the overnight volume profile. So after 9:30, when price approaches the value area high of the overnight session, same methodology, guys. We want to look for aggressive buyers to step in around here, but not really able to get a push up. And then we see aggressive sellers stepping in, right? So we have more aggressive sellers here. And then we also like closed below all these aggressive buyers that push the price up towards the value area high. And once you get a close, and also if we get a reclaim back inside the value area high, so first we peak above and then close below, right? So this is a failed auction. We go above the value area high with absorbed buyers, and then we see aggressive sellers, right? And that's pretty much a short position. Now in a negative gamma regime, right, if you mostly might get breakouts, of course context matters, and also the all the like your analysis. But if you want to look for a breakout above the value area high or low, when price breaks above the value area high, first thing first, I want to see aggressive buyers stepping in here that get a follow through, right? So what I mean by follow through is that, let's say that this is a candle, right? This is a bullish candle, right? And this is very important, guys, so listen carefully, because a lot of people get confused here and they're not able to spot absorption correctly. So let's say we have a bullish candle, and let's assume that we broke above the value area high. So this is the value area high. Now for it to be considered a follow through of aggression, right? So we have absorption and then aggression of follow through. So we can use the deep trades indicator to look for both. So again, if we see aggressive buyers within the body of the candle, so these are aggressive buyers within the body of the candle, not the wick, then that is a follow through. That is actual follow through. It's showing that price is going up with the aggressive buy orders coming in, right? So aggressive buyers were here, but the candle closed above them. That shows follow through. We managed to get a reward. However, if we have aggressive buyers in the top wick of a bullish candle over here, then that is the opposite. The buyers got absorbed here and price pushed below and closed here, right? So the buyers were not able to get a follow through here. Now, what about if we have both the aggressive buyers in the body of the candle and also the wick? Now, the way I do this is, let's say in this aggressive bubble, we had 67 contracts, right? And let's say that we had 69 contracts here. I don't know why I'm using these numbers. They seem familiar, but what I want to do is I want to prioritize the highest order size, right? Similarly, if we had, let's say, 69 orders here and 67 here, I want to prioritize this. So I want to look at this and ignore this. If I have this and this, I'm going to look at this and say, okay, they definitely is buying pressure coming in. So that is a long in my opinion. Okay. And that is pretty much how you do it. Now, again, from the value area high, if you're looking for a reversal failed auction setup in a positive gamma regime, that's ideally when you should look for a reversal from the value area high or value area low, because we're in a net positive gamma environment and dealers are forced to hedge against the price. So if it's going up and taps into a key level, they'll be forced to hedge against the price and they'll be forced to sell, right? And then pair it up with like a gamma level. So let's say we had a call resistance 0 DTE up here. We tap into it, more aggressive buyers getting absorbed, not able to get a follow through, right? And then we pretty much see, where is it? Okay, so we see aggressive sellers stepping in, right? We have aggressive sellers closing below all these aggressive buyers on the way and also reclaiming the value area high. That is a plus setup, absorption setup in my eyes. So now that we know how to find absorption, let me give you guys some examples and show you some ICT examples and also like volume profile examples. And that's going to be it. All right, guys. So this is Deep Charts platform over here. Now, once you get Deep Charts, there's an entire library of tutorials on how to set up Deep Charts and how to set up your data feed and what all the indicators are. It's literally A to Z. So I don't really need to explain anything except what indicators I use. So I go here, right to the indicators tab, go to indicators, volume, and then I just use the deep trades and sometimes the daily delta profile, right? It shows me absorption different way, but it's not needed. So this is ICT concept, right? Accumulation, manipulation, and distribution. And then we, of course, we have sell side liquidity to the downside here. And then we have buy side liquidity to the upside. This was 5-minute liquidity that I was looking at. So now for my settings for deep trades, what I have is I have my setting on this. So during London and Asia session, I have the manual filter minimum to 20, right? And then in the plot settings, I have it set at circle, show text, and then I have the minimum size at 5 and maximum size at 35. And then I have the opacity settings at this 10 and 50. So the minimum size and maximum size, right? What it does, it just looks at the average bubble sizes. And then if there is a actual big order that is bigger than the average, right, it's going to be shown. So for example, look at the size of this bubble over here, and then look at the size of this bubble, and then look at the size of these bubbles and these bubbles, right? So it shows me that is way aggressive than the average. So let's see what happened here, right? So we have this pool of liquidity. So now you can also say this is power of 3. This is how you can trade the power of 3 as well. So first you have accumulation. When price goes below and sweeps the sell side liquidity, notice what happens at this candle. So around this area, what we have, all these aggressive sellers, big trades, big bubbles here, right, is they are in the wick of this bearish candle and not the body. We have a very small seller in the body, but what did I say before? We want to prioritize the bigger orders, right? That tell us the story. They tell us the story. So a lot of aggressive sellers stepping in, and then price rejects and closes here. That is step one. We are not looking for trade at the moment. But then look at this bullish candle. Now look to the left side. We also had this bearish this seller inside the body of this bearish candle. So when I see aggressive buyer stepping in, so 40 contracts, right? And then we close above this seller. And then on top of that, in this bullish candle, we have more absorbed sellers. So 36 sell contracts in a bullish candle that closed above. So sellers stepped in here, but they didn't get any follow through for their effort. And price instead closed as a bullish candle. So we have 40 buyers, 36 sellers, and the candle closed bullish. What does that tell you? It means the buyers won the war here. And also we closed above the previous seller that pushed the price down to sweep the liquidity. And that is going to be my long position here. That is what I consider absorption, right? This is like A+ absorption setup where we see a lot of bubbles at this area, right? And then of course we have aggressive buyers stepping in, and bam, that is your long. And you can see how price target the opposing liquidity. And that was pretty much the start of the distribution move. So we had accumulation, manipulation, and then distribution. So let's move on to the next example. All right, guys. So here is an example of liquidity sweep, and this is happening in real time, by the way. So what you can see, we had these equal highs, buy side liquidity resting here. And once we swept that liquidity, you can clearly see what happened here. So we had a lot of aggressive buyers stepping in here, but they were not able to break above this level, right? And they didn't get a follow through. So a lot of buying here, but then price stalls here. So we pushed into the wall, and that's where we couldn't go above any further, right? With all these aggressive buyers here, what we need next is aggressive sellers to step in. So we have 30 sellers stepping in, but not a proper follow through. Then we have buyers stepping in. But then this candle here, guys, look what it did. So it first of all closed below all these aggressive buyers that pushed the price up towards the liquidity sweep. And then we had a close below, right? So now you could have taken your short position here, and you can see how price came back, retested this level here, 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 and here. And we keep seeing all these buyers getting absorbed. So a lot of buyers stepping in here, but they're just not able to get a follow through. And price is pushing down, potentially towards some draw down there. But that's pretty much how you use liquidity sweep. Let me give you guys one example of fair value gap, and then I'm going to give you guys a couple of volume profile examples, and also I'm going to show you the gamma confluence that you can use. All right, guys, so here is a fair value gap example, right? So we are clearly in a bearish trend here, and what we want to do is mark out the fair value gap. So we have a break of structure, we have a fair value gap. So let's mark out this 5-minute bearish fair value gap like this. Now let's drop down to 1 minute time frame, and let's spot that fair value gap. So it's right here, right? Perfect. Now let's enable our deep trades indicator, and there we have the picture. So first thing first, guys, we are looking for shots. Now notice what happens here. This is the 5-minute fair value gap. We couldn't inverse above it. We couldn't break above it. And what happens when we tap inside the fair value gap? We have 27 buyers in the wick of a bearish candle. They're absorbed. Then we have 40 contracts in a bearish candle. They're absorbed, right? Now, what is the next step, guys? What was the next step? We need aggression. So from the sellers. So look at this bearish candle here. We have 20 and 35 sellers within the body of the candle. That is A plus entry from the fair value gap. Also, we have CIST, if you want to think of it like that, right? When we get here, we get this candle. This could have been your entry. This could have been your entry, right? But then we also came back and retested this level once again with 50 aggressive buyers in this bearish candle here that couldn't get a follow through, right? And look at how price delivered from this one fair value gap, looking just at the, the order flow. And of course, we then have, if you look at it randomly, we have big sellers getting absorbed, price goes up. We have big sellers getting absorbed here, here. We see some more sellers in a bullish candle, right? We close above this aggression and price goes up, right? And then we have more aggressive buyers here, price pushes down, and you can see how this is such a powerful tool. So let's move on to the volume profile examples, and of course pair it up with gamma levels and your win rate will skyrocket. So I hope by now the absorption concept is clear, although I want to give you guys some volume profile examples as well, because at the end of the day, I don't want to hide anything from you. I want to teach everything that I know so you guys can successfully become profitable. So let's move on. All right, guys. So here is example for volume profile. So we're going to pair up like our gamma levels with the volume profile, overnight volume profile. So this is today, by the way, right? And I have my volume profile drawn out from 18 till 9:30. Do note that on deep charts, the timing is 1 hour behind. So 18 is going to be 17 and 9:30 is going to be 8:30, right? You can mess around with the settings. So I've drawn my volume profile from 18 till 9:30. That is overnight volume profile. Now, let's zoom in a bit here, right? You want to zoom in real nicely here. So this is the value area low, and we dipped below the value area low. Now, if I go here, we had our call resistance and HVL 0DTE levels at 29580. So let's just go here and mark it out at 29580 right here, right? And then we also have HVL 29575. Please watch this because it's going to be really important. Cool. Now, when we tap into this level first, right, you can see we have sellers around here. But then after absorption of sellers, we did have aggressive buyers stepping in here, but we couldn't really get a close above these levels, close back. And also we really didn't see a follow through, a proper follow through. So we have aggressive buyers in the body of the candle here, but if you look closely around here, we have more aggressive buyers, and that is a bigger size that was in the top wick of a bullish candle. So that is not a proper follow through. Now we push down once more again, right? And we have more sellers getting absorbed, right? And then this is our first sign. We have 30 buyers in the body of a bullish candle. And did we get a close below these aggressive buyers? So you want to mark out your box, not from the bubble high and bubble low, but the digits, right? This is the precise level, most precise level. So these are the biggest orders in the close proximity, right? And if you look very closely, we did get a close above this box, right? And these are the digits over here. Now that is a bit risky entry, right? But what you could have done is you could have also taken an entry here with this candle. So we closed above our key levels, right? So 39 sellers in a bullish candle. This could have been your long. Stops below this chunk of aggressive sell cluster, right? Around here, long here. And you could have targeted like 1 to 2 or 1 to 1.5 RR. But the best trade of the day came in a bit later today, and it came from a key level. So again, we are still below the value area low, right? We dipped below. And if you look here, we had put support 0 DTE level. Okay, it's acting as support, and this is at 29,500, right? 29,500. So let's mark out this level here, 29,500. Bam! Look at the precision of these levels, guys. And by the way, these are intraday levels. So you have intraday and end of day. I mainly use intraday levels because they have very high gamma, and also they're very reactive, especially if you're an intraday trader like me. So let's go here and let's see what happened at this key level. So right off the go, you can see 116, 51, 41 sellers getting absorbed. They are in the wick of the candle, right? And then we have more sellers around this area at the key level. And then what do we see, guys? We see aggressive buyers stepping in, but look at this here. This is a very strong 331 sell contracts. So I'm not going to take a long. Yes, I can be hyper scalping here, so I could take a long here. That comes with discretion and target this level. But if you want to be really safe, you want to wait for price to close above this number over here. Aggressive seller, right? That is our resistance zone. If we break above it, that is a long signal, right? And then you can take a long like this from a key level, put your stop below these orders and also like this big bubble, and right, you can target pretty much 1 to 2 or 1 to 3, 1 to 4 RR. Notice how we came back into this aggressive sell level. When resistance breaks, it turns into a support, right? And then notice what happened here. At this level, we had 31 sellers, but then aggressive buyers stepped in immediately, and then we closed above this cluster of sellers right here, right? That is another long position here, and then you can see that price goes up, right? And then we tapped into the GX3 level here, which is a 29700. So let's mark that out. 29700, it's around here, right? So notice what happened here, guys, right? Same stuff again and again, guys. From a key level, right? Even though we are not above the value area high, because the range is so big today. If you look at this, we just had such a huge displacement, expansion, right? So from here, just for absorption example, right, you can see we have 54 buyers getting absorbed, right? Not able to really get a follow through, no continuation to the upside, even though we got a break. That is not enough because we have buyers in the top wick of a bullish candle. That is not a follow through. And then we have aggressive sellers here. So 30 sellers in the body and also in the wick. So in this case, that is not a proper follow through or aggression. I want to see more. So we have 43 sellers in a bearish candle. That is a proper follow through. Now, the next step, we want to see price closing below these aggressive orders, right? That gives me more conviction. So when price breaks, you can see price close way far down. So a retest entry could have been better. And then you could have taken an entry here, targeted this big order here, right? And this is how you play the markets, guys. It's really that simple. Okay. So pretty much that is going to be it, guys. And if you want to look for like a breakout type of setup, so let's assume that, let's just go here, right? We have value area high, price closes above this, and the first candle that closes above the value area high, it has aggressive buyers in the body of the candle, right? And along the way, we had aggressive sellers getting absorbed and absorbed and absorbed, and we are in a negative gamma regime. That gives you high conviction. So that's going to be it, guys. I really hope you guys are now familiar with the absorption concept. And if you have any questions, please do ask in the comments. I'll try to answer each and every one of them. And please subscribe, and I'll see you guys in the next one. Take care. Goodbye.